Excellent. This is the June 11th meeting of the Finance, Budget, and Audit Committee.
You're going to have to be louder.
Yeah, this is the June 11th meeting of the Finance, Budget, and Audit Committee. I'm James Bonsall. We have Leslie Stevenson and John Braden here, as well as the auditor, Jim Stiff. The items on the agenda are public comments on city finances. Anybody that wants to kind of make a comment will have 3 minutes to do so. The second item, I'll give a quick update on the capital improvements plan and kind of where we're at and where we kind of want to go with that. The third item is the auditor. We talked about the tax budget, any miscellaneous updates from the auditor, and then if there's any other city finance issues that we feel like we want to discuss, we can do that at the end. Is there anything that we're missing or anything that notes that need to be made?
No.
Okay. Awesome. So is there anybody that wants to address council or the finance committee? Okay. So hearing none, we'll move on to the capital improvements plan update. So I'd hoped when we talked at our last finance committee, I'd hoped that this one that we would have the capital improvements plan to kind of review and to potentially have council look at it and at least do a first reading tonight. Considering the changes or the letter that we all received, that we have heard about from the mayor regarding staffing in the fire department, I think it would be premature to pass the capital improvements plan without knowing exactly what the plan is when it comes to staffing. And so I'd like to get some more information from the mayor. I've talked to him a little bit about it and about like when hiring might happen. And then we also have to find out how that's going to affect the financial recovery plan in general. And so we'll have to just see where we're going to go from there. But I don't have any really other updates at this point on that. I would say that if we don't have any better information by the next council meeting, we'll probably try to do another finance committee before that. We'll probably just try to bring a capital improvements plan with our kind of best guess of where, based on the mayor's letter, and we'll have to alter it to account for any increased spending if that's kind of where we go. Are there any questions on that? Yes.
Thank you. Just a comment. When we worked with the departments to create that and got public input as well, it was based on known needs and suggestions on where to actually begin the process of keeping on par with updating and upgrading things as needed. And so I think it's important to note any revisions we might consider based on the mayor's communication around staffing are to really try and acknowledge this is a collaborative process and that we don't control all the money and decisions that are made. But I think it's also important to really underscore those costs, some of them are fixed. They weren't just guesses. And so I just want to make sure we note that. I think we did throughout the process up until now talk about the implications around the plan is drafted based on the assumption we'll have revenue. But if the revenue is not available, it does not mean some of those needs go. It does not mean some of those needs become unneeded. So I just want to make sure we name that. I appreciate your acknowledgement that there are some other decisions potentially that could impact the plan, but I think it's important to lift up the work that's been done has been to get us on track where we need to be on track with what we spend.
Yeah, thank you very much, Councilperson Stevenson. Okay. Any other questions on the capital improvements plan? Essentially, we're just going to delay it 2 weeks until we get more information about staffing and then also the implications on the plan. Next item is the tax budget. So there's going to be a public hearing at the council meeting tonight on the 2020 tax budget. The budget's available on norwoodauditor.com and I think there's copies in either the auditor's office or the clerk of council's office. But at this point, I'll turn it over to the auditor to kind of run through this with us.
Yeah, thank you, Mr. Chairman. We do have copies of the Norwood tax budget. They've been posted for more than 2 weeks on norwoodauditor.com. We've also had copies available in the auditor's office and in the clerk of council's office. I did bring the leftover copies from my office up here, so they're now in council chambers for tonight. But again, it can be downloaded and read in PDF format from the website, norwoodauditor.com. The tax budget is the first step in preparing the budget for 2020. This is a requirement of the state that we file this with the county, showing that we have some plan to spend the tax revenue in the form of property taxes, as well as local government funds and other state government funds that come into the city. In order to secure that money that's collected for us on our behalf by the state and by the county, we have to show how we're going to be spending that. Even though the majority of our revenue comes from our own earnings tax, this still makes up a significant portion of our total revenue, about $4 million worth. So in order to get it, we have to show that we're planning on what we're going to do with all of our revenue starting in 2020, January 1st, which is what this document is. This is a representation of the current fiscal emergency plan. So if you look at the plan totals for each department, they match what's in this tax budget. That's a requirement for being in fiscal emergency. It's not like we could sit here and say, well, we want to shift money from here to this, from point A to point B. We have all of this represented in the plan, and that's what's represented in the tax budget. So we're going to pass this, hopefully tonight, by resolution. It gets filed with the county. The County Budget Commission meets sometime in late July, early August, and reviews this, accepting it. They will return to us a document of rates and revenues that then we have to accept by resolution. And that basically is a list of all the property tax and the state money that comes in. We then pass that by resolution, file that again in September or so with the county, and that secures that stream of revenue for the city.
Perfect. Go ahead.
Mr. Stitt, can you remind us what's the time frame in which the second resolution approving the rates and revenues is needed?
I'm not familiar with exactly when that's going to be. When that comes back to us, usually we have 30 days to accept it. It usually happens in September or so, early fall.
Can you confirm that the expenses that are listed here, do these match the financial recovery plan that council passed in March?
That is correct. The expenditures listed on this form for the general fund, which is page, I believe it's starting on page 3, 4, and 5. Those match the actual amount expended for 2017 and 2018. They match the fiscal emergency plan for 2019 and the fiscal emergency plan for 2020. As we move to the other funds besides the general fund on page 7, the funds that are in fiscal emergency, funds 2 and 3, and I think it's 81, all match what's in the fiscal emergency plan. The rest are based on historic estimates and projected carryover amounts.
You said 2, 3, and 81?
It's 2, 3, and I believe 81 was started off being in. That's the building assessment fund.
Yeah.
I have a copy of it here. I could look. But. The current plan only has 2 and 3. It looks like they dropped 81 out after the last plan.
Okay.
So it's Fund 1, 2, and 3 are the 3 that are in fiscal emergency right now.
Looking at Exhibit 3, looking at the proprietary fund types for water, I did have a few questions on that. So we're estimating here, I guess the question is, does what we're submitting, $4 million estimated revenue and then $4 million estimated expenses, does the expenses actually, or sorry, $4 million, yeah, it's 4 and 4. Right now, our water fund, we are, pretty significantly in the red, and I know that the Auditor of State folks are looking at that, but does this accurately reflect that, where the water fund currently is?
No, it's showing a zero balance at the end of this year when realistically we may be facing a negative balance at the end of this year to carry forward for the water fund. That's the current projection. However, the water fund does not obtain any taxes from the county or the state. Therefore, it is not one of the ones that's scrutinized in this. Okay. So what we're doing is we're saying next year we're projecting a $4 million revenue in the water fund, and we're projecting spending all $4 million. It does not show a projection of how negative we're going to be at the end of this year, or if we will be.
Okay.
Can I follow up on that? Excuse me, a couple of meetings back, we were made aware that the auditors were looking into the water fund. They were still auditing it. Is there any update on where they're at with that?
They've been looking into it. They had an outside source from within their office, so the people that I directly interact with are not the ones that are doing that, but are responsible for it. I have not been given any recent report as to what they found or if they found anything. The last discussion I had with them was last Wednesday, and at that time they had nothing to report. They may have something by the time of the next Fiscal Emergency Commission meeting, but I'm not aware.
Thank you.
Okay. Are there any other questions about the tax budget that we have here? So one of the, I'll just say a statement about one of the exciting things to note, and I've pointed this out before, but we'll just point it out again, but when we go into the bonds section of this, so this would be Exhibit 6. The only bond that the city has outstanding that's not like a tax increment financing bond, or a bond, the only bond that's paid for at the general fund is our bond that was issued in 2004. And the due date on that is 2021, so we only have, after this year, 2 more years of payment, so a total of $637,000 after this year to pay back on that. So just something exciting there that by the end of the next council term, unless they do something different, there will be no more city debt out of the general fund for I guess bonds or notes that we have. There's other notes that we have for TIFs and other like Paycor and Cornerstone, but not from the general fund. So I just want to make sure we note that and let citizens know that there's the $311,000 or so that we've been spending in many of these years, and some years it's been a lot more on this bond. It's finally coming to a close, so it's an exciting thing.
There's been years where it's been a $1.2 million payment. It'll be good to be done with it.
Yes.
And the city needs to strongly consider the effect that having those bonds had on this city, and the fact that it is one of those major components that put us into fiscal emergency and made us go negative due to the amounts that were owed in huge kind of lump sum payments that were owed in the middle of the payment structure of this, that we need to be very cautious borrowing large sums of money like that again.
Good advice.
Yeah, Councilman Stewart.
Thank you. Following up on what you just shared, Mr. Stith, has your office ever been asked to do any type of bond impact analysis beyond the numbers? Like to put it in a bigger context for the city to consider?
Specifically, what were you looking for in that?
What you were just saying, I think, is very interesting. I'm aware you do the audit every year, and it has a little bit of analysis, but I'm wondering, have you ever been asked to do that? Provide some type of analysis on the impact of using bonds in our city?
Well, the impacts of using this bond, if we go back to 2003 when they were first putting this together, they wanted to borrow money to do some street projects. They also had significant debt in other areas from a smaller bond previous to that, going back, I believe, to 96 or 94. And then there was debt on a number of vehicle purchases, ambulance, fire engines, things like that. And so the city said, you know, we got this great thing. We're going to have a place called Rookwood Exchange, and we're going to use eminent domain to take over those properties to build this great place. And we have businesses signed up for Rookwood Exchange, and they're going to come in. And so we know we're going to get this extra revenue, and we know where it's going to come in down the line. They're counting their chickens before they were hatched, because they borrowed money to pay off old debt and bundle it together, and then they borrowed money to take additional money to put into the infrastructure of the city. And they said, we're going to start off on very low payments early on in the payment process. Every year we're going to be paying off a bond. So it's not like you're paying off a payment on a bond. You're paying one off here, might be $50,000. And then there's different bonds to be paid every year. And what it did is when they looked forward, they said around 2010, we're going to have Rookwood Exchange open. So we're going to have all this extra money. Let's make these huge bond payments 2010, 2011, 2012, 2013. And then it'll taper off down at the end, 18, 19, 20. But we know we're going to get the revenue from Rookwood Exchange. But we know what happened there. We know the state came in and said, you know, you can't take people's houses. And it held that development back. And so here we've got all this money borrowed on the anticipation of revenue from a development that didn't happen. It eventually did happen, but further down the road. Now you put on top of that same time period where we're seeing the spike in the bond payments because of how it was structured, was the time of the economic collapse in the United States. So then we start going, well, maybe we need to refinance these bonds. Maybe we need to restructure them so we don't have to make all these big payments. The problem is, as I said before, it's not one lump sum we're paying off. We're paying off different bonds every year. And when we pay those bonds off, there's early payment penalties equal to the total interest on it. So if we paid off the ones that are owed over the next 3 or 4 years or 5 years, we still pay all of the interest on that as though we paid it at the time it was due. So any kind of restructuring or refinancing that we would do, we would have been taking a huge financial hit on. And we hit that time around 2013 where we had somebody come in and say, sure, we'll refinance some of your bonds. And we were trying to get bond ratings to get a better refinancing on. And so we took $1.7 million, almost $1.8 million of the payments that were due over a 3-year period, and we restructured them into a note to be paid back in 2 years with the intention that the city would change its financial outlook and make some fiscally responsible decisions within the city and then get a better bond rating so we could get a better deal. Because we were paying 7.5% at that time, up from 4.6% on the fixed rate bonds that we were paying off. Council hired an outside bond person to come in and search for our bonds and found one that they would pay off $1.77 million, so $1,770,000 on a 2-year note at 7.5% interest. And that was either that or, we closed apartments to make those payments. And so we did. We borrowed that money. We paid it back in 2 years. We restructured a $1.2 million, so we took $570,000 off the table there. We were still making the interest payments on the big package, but we had taken those couple of peak years and kind of pushed them down the road a little bit, and we owed $1.2 million. That $1.2 million, when it came up after a 1-year note, plus the $300,000 or so that we still owed to U.S. Bank for the long-term bonds, came due in 2016. And we all know what happened in 2016, because we made those bond payments, but it put us negative, which put us into fiscal emergency. That combined with a couple of other things. So, yes, it makes a big impact on the city. It makes a big impact when we start spending money that we don't have yet. It makes a big impact when we count our chickens before they're hatched and we start saying we're going to borrow money from our future revenues that are considerably higher, that we project are going to be significantly higher. So we're going to borrow money based on those projections to fix the budget today. And that's what we've been struggling with here for 20 years.
So to just, one, thank you. I appreciate the context that you just shared. I think what I'm trying to zero in on is from your perspective, are you suggesting when you make the comment, really consider the impact of bonds, that there's different criteria, more conservative projections that the city needs to start using?
I think that we should always use conservative projections. And that if a developer says they're going to open a development in 5 years, that we don't start projecting the full amount of the revenue on that development before the land is even purchased. And we don't suddenly sit here and look into the future and go, I think this great thing is going to happen, so let's spend that money today. And that's where we got hurt. Now,
Sure.
How that affected the city, what was the actual impact on the city is we were paying significant interest rates on bonds over a 20-year period that money we should have been putting into the city now or then. That would have, helped us with payroll issues. That would have helped us pay the bills when we couldn't pay them. That maybe could have been used to maintain our infrastructure to a better state than we have now.
Okay, thank you.
Okay. The next item on the agenda
Mr.
are
Bond,
just, yes.
I noticed we've already went through our public hearings, right? I noticed we have a visitor. He's not here for a public hearing, is he? Just if he wants to
Public comment.
just make
Public
some.
comment.
Comment session, yeah. Mr. Francis, did you want to say any comments about the city budget, or were you just here to listen today?
Just one. I wish people in this city that go crazy on the social media would come in and listen to Jim Stitt explain just what he's got to explain. But I don't know if they could copy on this or not. One other comment. And, I don't want to sound negative, but I don't see how you're going to get out of this mess with the contracts with these police and fire. I don't see how you get. They say they want to negotiate. I have to see this. Nobody's going to take the cut and pay. So we're going to have to deal with this. And unless this revenue somehow goes sky high, I don't see how we're going to get out of this mess. That's all I.
Yeah, thank you, Mr. Francis. Okay, so item number 4 is updates from the auditor. So did you have any other miscellaneous updates, things going on that?
Yeah, I've provided a packet of information. First things and most important, the statement of cash position with month to date. 2 pages for all of the funds for the entire city. Pretty self-explanatory, but this is one of those things, if you don't look at any other financial documents all month long, this is the important one. It shows month-to-date and year-to-date revenues and expenditures for every fund. It shows the outstanding encumbrances or open purchase orders, and then what the balance would be if all of those purchase orders were paid today. Then we looked at our revenue figures. There's a couple of graphs. I always like to make graphs to make it easier for me to think. But so we have the earnings tax actual versus predicted. We're pretty close to being on course for that. Understand that the numbers that I report are always different than the ones the treasurer reports because he mixes Fund 89 money with Fund 1 money. I only show the general fund revenue for earnings tax, which is the money we can spend. So money that goes to a special fund to be held for later to be reimbursed does not get counted into the general fund revenues. There'll always be a little mismatch between the treasurer's reports and the auditor's reports. It'll also be a mismatch between our budget and appropriations and what the fiscal emergency plan has because they mix that Fund 89 money in. Next page is the general fund revenue versus predicted, actual versus predicted, that graph of showing when I anticipate how revenue is going to come in throughout the year, month by month, and how much actually did. And that also matches this sheet here, which is the general fund monthly revenue, and it shows all the major keys in the general fund, how much revenue came in each month, how much was projected, and the under over for each one of those. And if you look, our total shows that year to date, we are $36,000 higher in our revenue than my beginning of the year projections for the end of May. So year to date, 36,000 higher. That's a very small percentage. So we're pretty close to where we thought we would be. No big surprises on the revenue side. There's a simple graph too that just shows year to date earnings tax and general fund revenue year to date compared with prior years. So
Mr. Stith,
Yeah.
one quick question.
Yes.
The 2019 earnings tax revenue, actual versus predicted, the projected is what's in the plan, whereas the predicted is what was reported from the earnings tax department. Is that what you said?
No, on that graph that you're looking at, that's the 2019 earnings tax actual versus predicted. The actual is the money that's actually come in, what revenue we've seen
that part.
into the general fund. The projected is what, at the beginning of the year, I projected would be for each month based on the figures that were supplied by the treasurer. And then the actual minus predicted, which is the bottom line.
Got it. Thank
So
you.
when we see that this month, $30,900 higher than projected. Last month, $285,000 lower. Year to date for earnings tax is $58,485 less than projected. But overall, the general fund is $36,078 higher than projected.
So the total predicted number on the total general fund, actual versus predicted, is that from your office?
Yes.
Thank you.
This is a revenue tracker that we use, that we look every month at every key that comes into the general fund. So every revenue key we track, and any large variances we'll start looking at in July once we close out June, and then we'll adjust our projections accordingly.
Thank you.
I've got a few other things that deal with budgetary issues. One piece of information that is in your packet is the purchase order requests that include invoices but have insufficient appropriations. That's the ones that have the stars. This is the insufficient appropriations list. So when somebody sends a purchase order to the auditor's office and there is not enough appropriations or budget in the key that they're requesting, it's rejected and sent back to the department head with a letter that says there's not enough appropriations for you to get this PO. Either lower other purchase order amounts so that you have enough to put this purchase order through, or address this directly to Finance Committee. We then maintain a list of all of those and present that in the financial packet that's sent out to all department heads and to all elected officials every month, which is this list. There's a few things that are important on here because they're negative. And so the keys that are negative are things that have to be addressed by the end of the year because they can't all be allowed to stay negative. For example, you might see things like in the building department, negative $10,000. That's because the last year's 2018's fiscal emergency plan projected for 2019 more appropriations for the building department in their contractual key. So the beginning of 2019, our initial budget that was passed was based on the 2018 plan. When we passed the 2019 plan in March, it decreased the appropriations. So our appropriations had to decrease to the building department. Well, they had already encumbered or had outstanding purchase orders for $10,000 more than what their total budget would have been in 2019. So we need to make adjustments for that. Recreation, negative $2,000. That's because of the $10,000 bill that we had not budgeted for and that there was no purchase order for that was sent to council from Recreation and entering into an agreement without permission from the city. So we owed $10,000 for something we knew nothing about. And that we did not have any, there was no approval to spend, but it got spent. So that's still an outstanding issue that needs to be addressed, but it has created a problem where that key has gone negative. So some of these things could be adjusted by a department head decreasing an existing purchase order. Maybe there's a miscellaneous repair supply key that they put a purchase order through for $3,000 and now they're trying to buy something else. Well, they can decrease that existing one. But one of the interesting things that we're looking at and we've been working with the state on is the list that looks like this lovely spreadsheet, which I'm going to explain to you. The fiscal emergency plan, each key is based on two things. Number one is the expectation of budgetary needs for that key. The other thing is outstanding purchase orders available at the end of 2018. So a good example would be, let's say the auditor's office, we need $2,000 in our contractual key for this year. But I have $500 purchase order from last year still open, and I'm waiting on bills to come in January for things that I bought in December. So the plan has $2,500 in the plan. But our appropriations, when we write the appropriations, is for $2,000 because $500 of that is for that purchase order I never used. But what happens if I only spend on that purchase order not $500 but $200? So there's $300 more now in the plan than there are in our appropriations. So what we do is we now look, because it's June, we've closed out all the purchase orders from 2018. And some of these still had money on them that is in the plan, but didn't get spent because the amount spent out of the purchase order was significantly less. So that's $116,000 in the general fund. So if you look at this spreadsheet that's in front of you, far left column, those are your general fund departments. And then there's the name of the department, and then there's where it says account, that's the key. So you see 0310, mayor's clerk, of course, 7,200 key, contractual services. They projected $250, that's what is in the plan, $250 in outstanding bills from last year, only cost $125, so the plan is currently $125 in that key higher than what the appropriations are. Which means now that we've closed out all these purchase orders, we've got a little wiggle room between what our budget is, our current appropriations, and what the plan is. And so we can actually increase the appropriations up to the level of the plan in those certain keys. That unexpended amount is the gray column down the middle where it says unexpended at the top. There are certain keys that need appropriations. We've gotten letters from the police department, for example. Their contractual key, they said they need more money in there for some vehicle repairs and some other issues. We also have, when you look at the insufficient appropriations list, they need money, the police department, in their 7,300, their materials and supplies keys to buy bullets, because police should go and practice shooting a lot. So they're good at it, and they know not to do it. So they have to practice. So if we just take that unexpended amount from the POs that were closed from last year, we can increase police contractual by $54,000. We can increase their materials and supplies by $5,700. The building department contractual key that's negative $10,000, they have $8,882 available in that open PO. So we may be at the next council meeting, hopefully, if not the next one, then 2 council meetings from now, be able to address changing a number of the appropriations to match what the plan is. Because when we take our current appropriations and we take the actual money expended on those purchase orders from the end of 2018, there is a difference between those numbers and what the plan is. Does that make sense to you?
Yes, sir.
So we are working with this, with the state on this. Anna Mary put together a spreadsheet of what she thought it was. I put together mine. I'm currently matching the two, and they're within pennies of each other. So I do need to, before we do this, update the certificate of estimated resources with the county for the funds that would be affected, which would be the general fund and the funds listed at the bottom of the page, and change the encumbered amount on the certificate to be what was actually expended. And then that will free up some extra availability of appropriations on the certificate, which means then we can raise appropriations to the amount of the certificate of estimated resources filed with the county.
Are we actually able to do that though? Because we can't raise appropriations above what the total is in the in the financial recovery plan, can we?
Right, so we won't. It'll actually raise it to what the total is in the financial recovery plan, because the financial recovery plan is our current appropriations plus the open purchase orders at the end of 2018. And now that we've closed all of those, it is that money that's left in between what was spent on those POs and what the POs were for. That balance, it should be available to us to use for appropriations this year.
Okay.
And it'll end up matching the plan.
Okay, great.
Just changing columns.
Okay.
Changing the, yeah, so you're basically decreasing your beginning year encumbrances, which increases the amount available for appropriations. Yes.
Awesome.
I knew what you meant.
So going back to we did get an email from the police chief about the ammunition. I went and just forwarded it to you all a few minutes ago. It mentions that the materials and supplies, as we're seeing here, there's not enough funds in it. He's also saying that he's got new employees that are going to be hired on, and so they're also going to need additional funds in the materials and supplies for that as well. It looks like the amount that is appropriated right now for it is,
For materials and supplies,
yes.
so you're gonna look at 01, 08, 42, 7,300. Oh, wait, 32. Sorry, 42 would be spending the fire departments.
Yeah, they might have a problem with that.
Yes. Excuse me. You had $55,324 under materials and supplies. Year to date, they've expended $15,259. They have outstanding encumbrances, which are purchase orders currently written, of $37,250. They have unencumbered balance of $2,814.
Right.
With the changes that I was just describing, that would add automatically $5,769 to their materials and supplies, but it would add a significant amount to their contractual, about $54,000. So they're going to have $75,000 unencumbered in their contractual. So when we go through that process of changing the appropriations to match the plan, we may be able to shift from the $7,200, which is their contractual key for the police department, to the $7,300, which is the materials and supplies, to be able to buy the uniforms and bullets.
Gotcha. So I'm just pulling up the financial recovery plan right now. So can we, okay, so then we'll talk with him about moving some of it from contractual services to materials and supplies, I guess. I mean, I'd rather keep it in the department and not have to try to find funding elsewhere to do that.
I spoke briefly with the police chief today about what we were just talking about with changing the appropriations due to the lower amount of expenditures out of the open POs at the end of last year, increasing the unencumbered money that's available, and just told him it might be 2 to 4 weeks to do that, but we should be able to accommodate his needs, all within his own department without changing the plan and without taking from anyone else.
Okay, so for the police I guess I'm still confused. There's it says 175,200 for contractual services in the financial recovery plan for police crime control. Right now, the appropriation for that is 163,000. Why don't the appropriations match what's in the plan? Did you say again because you all had to pick and choose to not let it be over that limit that we have with the, I guess with the auditor, the county auditor?
The amount in the plan is the amount of the appropriations plus the amount of any open purchase orders at the end of 2018.
Okay. Oh, okay. I'm sorry. Yeah.
So
Perfect.
When we look at that key, contractual services for the police department, actually that's personnel services if we do that. So the contractual services just for the police department alone, there was 11,501.02 in POs at the beginning of the year. And so if you add that number to the current budget, that should give you what's in the plan.
Okay. Perfect. Yep, that looks about right.
So basically we're talking about cash versus accrual. The plan is based on cash expenditures. The money that actually is transferred or utilized during a fiscal year, where we budget on an accrual basis,
Right.
which is the year that the debt or promise was incurred. So we put any expenditures for purchase orders for 2018, even though they're spent in 2019, like your December gas and electric bill, it goes on 2018's books, not on 2019's books. That's an accrual method. Where the plan is written on a cash basis, saying, well, wait, you actually paid the bill in January, so we're going to put it on 2019's plan because they're worried about the cash and the cash flow. But we have to report and budget and do appropriations on an accrual method. And that's the way the audit is done also. All those numbers are backed out, put into the year that that the debt was incurred.
Okay, great.
Which if you ever look at the financial reports on norwoodauditor.com, or you guys read your reports that you get that come out to you every month, you'll notice there's one that says expense account current year only, and there's an expense report month to date. And you look at the budget numbers on those two, and they're different. But they're different by the amount of open purchase orders at the beginning of the year. The current year only shows what the budget is, what the budget's passed, how much is spent out of this year's budget on this much money, on this year's money. But it will also end up showing on the report at the end of the year, money spent next year in January and February paying December's bills for 2019.
Perfect. Okay. Any other items that you have for us?
The appropriations changes for tonight.
Yes, let's talk about that.
So I sent a letter to council. I just wanted to send an explanation to the resolution, or to the ordinance that was going to be on tonight, so that people didn't just go, well, wait, why are you changing appropriations? Well, this is an explanation of it. So this changes the, I'll have to change, I put scold instead of school. It's not. there's two keys, there's two funds. And funds and keys are not used interchangeably, right? A fund is a major accounting unit, a key is a accounting code underneath the umbrella of that fund. So we have two funds, Fund 75 and 92, which are TIF, or Tax Incremental Financing District, school funds. So when you do a TIF, Tax Incremental Financing District, you're making agreements to collect money to pay off bond notes that the developer is overall responsible for if the revenue doesn't meet the amount to pay those bonds for improvement of that TIF district. Bond counsel, we hire attorneys to come in that specialize in this. They write this whole thing up. The city's not on the hook for any money. If the revenue coming in from the tax revenue from the improved property is not enough to pay those bonds, the developer has to pay it. However, that's fine to say, in a TIF, it starts off, let's say you have a cornfield and you're paying property tax for that cornfield. And a developer comes and says, I want to build an office complex on that cornfield, but I need sewers and I need gas and electric lines and I need streets. So what you do is you create a TIF, a district, tax incremental financing district, and you borrow money in the form of bonds to build the infrastructure to put development on. And then the city will always keep getting that money in property tax that is that cornfield level money. And then you have money in addition to that on the improved property, which goes to the county. So they're paying the full amount on the improved property. But the difference between that entry level payment and the new amount that comes in, that money goes to pay off the bonds. So it's a self-sustaining improvement of property. City has several of these. Problem there is the school district, if you just do that, the school district doesn't get its money. The school district would just get the money based at that cornfield level, not at the new development level. Because all that extra money coming in for the development is paying the bonds for the infrastructure to create this better property. So the school district is part of that negotiation. And as part of the negotiation, they usually set up some form of calculation that says, based on the amount of levies that the school district has at a given time, they get a portion of that higher amount that's paid. That's called a pilot, or a payment in lieu of taxes. So the school district gets part of the money that comes in that goes to these special funds to pay off the debt. But how much? Well, we let the bond councils figure that out, because each TIF is calculated in a little different way, and these attorneys write it. So when we get our money coming in from property tax from the county, they say, here's how much this TIF gets. And usually each TIF has at least 3, sometimes 4 different funds, one of which being the school fund, another one being the debt fund. So we actually let the bond council calculate. We say, here's how much came in, how much does the school get? And then the bond council talks to the school, and their accountants look at it too, and they come to an agreement. And they say, we get a certain amount. Well, that changes every year. And so if we always base our appropriations on what they got the previous year, especially in a project that is being developed and improving over time, the amounts they're going to get go up based on that payment in lieu of taxes, what the new improved rate will be. So we get that information back from the bond council, and they say, pay the school this much. And we have that money, and we say, okay, we're going to pay them that much, but now we need to change the appropriations to match that amount so we can write the checks to the school. Clear as mud.
Okay, so do you have the Exhibit A for that?
Yes, it's in your packet.
Okay.
I'll change it to where there's an extra D. There was a typo there. So I'll have to change that, but I'll print copies out for council.
Okay, great, thank you. Okay, any other items that you have for us?
That's it.
Okay, so are there any other items that you all have for the committee today?
I think we covered it.
Okay. One thing I did want to note is at least in the police department, I had noticed the expenditures for personnel. It seemed like it was just slightly over, like where it would be if we divided the year in 12, and we've finished 5 of the 12 periods.
It was a 3 payroll month.
Is that what it was? Okay. Well, that's probably it then. So
There's also early in the year some increased expenditures. There's a couple buybacks that come early in the year. If you look at the cash flow sheet that I provided you, on the bottom you'll see there's police buyback, there's some other early year expenditures that come out. But that's $144,000 came out in February for the buyback.
okay, so you're thinking that it would be, we're a little bit ahead because we had some of these larger fixed expenses, or like buybacks and other things earlier on.
Yeah, it's also not a consistent flow. It's not like every month the payroll is going to be the same.
Oh, for sure.
You're going to hit certain minimum man requirements, and especially I think going into the summer here, when you look at when you're looking at the overtime numbers and how much is actually expended in overtime for police and fire year to date, we're way under what 5/12 of the year would be. But this is summer. Everyone's going on vacation. This will be the time when you get a lot more overtime over the next 3 months here.
Okay, that's good to know. So, so the total, we had appropriated 6.1 million. We had expended so far. Oh, okay. I think part of it's an encumbrance. It potentially looks like for a future payroll, so, or for a pension payment or something.
Yeah, usually the encumbrance would either be a workers' comp or a pension payment.
Okay, that's probably what it is then. Okay, that's good to know. Okay, so I am checking in. One of the things I've just been doing over the last little bit, I'm just looking at open POs that are out there and just other expenditures, seeing for the current year if they match kind of what our initial draft plan was for the capital improvements plan. For example, like for recreation, we had $60,000 set aside to do the gym floor and the backboards. Well, I was just checking the recreation encumbrances, and there's 2 encumbrances, one for electrical panels at Waterworks for $15,000 and one for some diving board, either repair or replacement. It just says diving board on it for $5,000. So that's $20,000 of our 60 that we put in there. And so we made the appropriations, at the beginning or mid-April, but we don't have necessarily a lot of control about how those appropriations are spent. And so essentially what I've been working on doing and will keep doing is I'm going to go through and find out places where things are getting spent, like capital funds, in areas that maybe we didn't potentially anticipate. And so it'll help us to, we really don't have the control if you look at it overall. Overall it's the city administration that kind of decides, but if they do decide that they want to spend certain dollars elsewhere, then we'll need to update this sheet so that it can be known that that's happening. So
I'd like to.
Yes.
Yeah, I can address one part of that, which was the diving board. When they were in the process of opening the pool, they found the diving board was broken or unsafe and needed to be replaced. It was much more expensive than what I thought it was going to be. This was discussed with the fiscal emergency supervisor, who felt that we should go ahead and use that capital expenditure, but it is the intention that as we move further in the year and some adjustments are made to the appropriations, that would be increased in that key taken from somewhere else.
Okay, that's helpful.
So that the diving board, yes, it did come out of the capital expenditures, but the long-term plan is to increase that key by that amount of that purchase because it was a repair that was needed.
Okay, great. Thank you so much. And then the other one, the electrical panel of $15,000. There's also there's also another PO out of Public Lands and Buildings for the same amount for the same thing. So I'm hoping that one of those can be closed, and then we can still have the full $60,000 back, or at least we can have the intention to get both the backboards and the floor replaced. But at the very minimum, as most of you all know, who's been in the community center, that flooring with the nails sticking up in the gym floor is just a huge safety hazard. And I hear from parents all the time, well, not all the time, but every couple of weeks another parent comes to me to tell me about it. So we're hoping that we'll get that replaced this summer, and so I'll keep an eye on that as well, to ensure that happens. Okay, I would like to schedule another finance committee meeting before our next council meeting. Essentially, just so that we, at that point, whether we have all the information, at that point we'll be reviewing the capital improvements plan worksheet. I'll have the updates on it. We'll know a little bit more about what we could spend or couldn't spend based on other things that are happening. So I'm thinking the 25th before the next council meeting at 6:30 on that day. Would you all be available to be there? Is that good with you, Mr. Braden?
Yes, sir. Thank you.
Okay, so we will pencil that in and I'll announce it at the council meeting 6:30 on June 25th. With that, we will go ahead and adjourn. Thank you all.